Hello again for our discussion this afternoon with the topic business continuity management. And we talk about two animals, the gray rhinos and the black swans. And maybe our first keynote speaker, Dr. Carsten Lehr, will give us an explanation about this terminology. Otherwise, I will do it later on in the course of our discussion. But first of all, I'm very glad that Dr. Carsten Lehr, Deputy CIO of FSAG in Dreieich, will give us our keynote and an introduction to scene setting for our discussion. So Carsten, the stage is yours.
Thank you very much, Jürgen, and good afternoon, ladies and gentlemen. Let me start by telling you a short story. On the morning of May the 8th in 1996, David Brochures looked down from Camp 3 at 24,500 feet high on the icy slopes of Mount Everest, preparing for a big move to the South Pole and then to the summit. He carried a 42-pound weighted camera being used for the first ever movie made from the highest point on Earth. What Brochures saw 3,000 feet below him alarmed him. More than 50 people trekked out from Camp 2, swarming across the glacier, climbing towards Brochures and his teams. Some of the climbers were clients being led to the top of the world by two experienced guides, Rapport and Scott Fisher. Furthermore, Brochures and his team were already getting a late start, sleep deprived and on edge from hurricane force winds that had battered their tents the night before. Brochures paused to consider, what if his team had to delay for a day due to continued wind and storm, giving the swarm of climbers a change to catch up? What if a bunch of people crowded the small tip-top of the mountain just as Brochures and his team tried to film his summit shot? What if dozens of climbers stacked up at the bottleneck known as the Hillary Step just before the summit, where only one climber at a time could pass up or down on fixed ropes? What if the previous night's severe wind presaged a change in weather? What if? The team agreed conditions just did not feel right. And they came to a clear conclusion and decision. Secure the gear at Camp 3, go down, climb back a few days later after the mountain had cleared. On the way down, Brochures crossed paths with the two guides, Rapport and Scott Fisher. The two guides looked surprised to see Brochures heading down in great weather conditions. The day had turned bright and calm, almost pleasant. Brochures told them about the wind and questionable weather and that the mountain felt crowded. Fisher flashed a broad smile and the two, Fisher and Hall, continued upward. The next time Brochures would see Hall and Fisher 15 days later, en route to the summit, both Hall and Fishers would be dead, frozen high on the mountain, victims of the greatest disaster in Everest history, in which 8 people had died in 24 hours. What does this story have to deal with business continuity management? Well, effective business continuity management consists out of 3 key dimensions. I would call them like productive paranoia, because you have to deal with them quite obsessively. First one, you build up reserves, whether cash, equity, human resources, if you're climbing, oxygen, and buffers to prepare for unexpected events and bad luck before these events happen, i.e. before the storm comes that matters most. Second, bound risk and manage time-based risk. Third, zoom out and then zoom in, remaining hyper-vigilant to sense changing conditions and respond effectively. Business continuity managers understand that they cannot reliably and consistently predict future events, so they prepare obsessively ahead of time and all the time for what they cannot possibly predict. They assume that a series of bad events can envelop them in quick succession, unexpectedly and at any time. Business continuity managers do these things before the storm hits. Decisions, disciplines, buffers, shock absorbers, whatever, already in place before the storm hits. These actions matter most in determining whether their companies pulls ahead, falls behind, or dies when the storm hits. Business continuity managers build buffers and shock absorbers far beyond the norm of what others do or what even regulators requires. Business continuity managers are extremely prudent in how they approach and manage risk, paying special attention to the three categories I already mentioned. And in detail, I would mention three types of risk. One is the deathline risk, which means the risk which can kill or severely damage the company. The other one is the asymmetric risk, in which the downside dwarfs the upside. And the other one, the third one, is the uncontrollable risk, which cannot be controlled or managed. Business continuity managers zoom out, then zoom in. What do I mean with that? They focus on their objectives and sense changes in their environment. They push for nearly perfect execution, like in the payment areas, and adjust to changing conditions. When they sense danger, they immediately zoom out to consider how quickly a threat is approaching and whether it calls for a change in plans. Then they zoom in, refocusing their energies into the execution. Rapid change does not call for abandoning disciplined thought and disciplined action. Rather, it calls for upping the intensity to zoom out for fast yet rigorous decision-making, and then zoom in for fast yet superb execution. Contrary to the image of brazen, self-confident, risk-taking entrepreneurs who see only upside potential, business continuity managers exercise these productive paranoias, obsessing what can go wrong. They ask themselves questions like, what is the worst case scenario? What are the consequences of the worst case scenario? Do we have contingencies in place for the worst case scenarios? What is the upside and what is the downside of a decision? What is the likelihood of the upside or the downside? What is out of our control? How can we minimize our exposures to forces we cannot control? What if? Business continuity managers do not have a greater bias for speed than others. On the contrary, taking the time available before the risk profile changes, whether short or long, to make a rigorous and deliberate decision produces better outcome than rushing into a decision. Finally, effective business continuity managers are facing the organization regarding the biggest threats and dangers by asking the question, how much time do we have before the risk profile changes, i.e. the storm hits? To sum up, business continuity management is a function which does not start after the storms hits you. Business continuity management starts from a processual point of view at a very early stage, comparable to other enterprise functions like finance, sales, whatever. The earlier business continuity management starts, the more resilient a company is going to be. Business continuity management needs to be executed, or at least be responsible on a C-level. This must go hand in hand with an improved risk culture and risk awareness. Business continuity management is a part of the general enterprise management and the general risk management. Skills and competencies must be trained accordingly. Business continuity management is not a metaphor describing an event that comes up as a surprise, has major impact, or is often inappropriately rationalized. It is not an event which is hardly predictable or rare event because they are beyond the real of normal expectations. In other words, business continuity management is not a black swan. Business continuity management is effectively executed more like an anti-gray rhino, not even a gray rhino, which is highly probable, high impact, but not a neglected threat. Anti-gray rhinos are not random surprises. One deals with them as soon as possible and before a series of warnings and visible evidences. Let me conclude by a saying of Roald Amundsen, the first man ever reached the South Pole. He said, victory awaits him or her who has everything in order. Luck, people call it. Defeat is certain for him or her who has neglected to take the necessary precautions in time. This is called bad luck. Thank you for your attention.
Thank you, Carsten. So the scene setting is given and on a really high level. You said prepare before the storm hits and prepare far beyond the norm. And board members are responsible for the risk culture in a company. So I'm very glad that I have two experts aside with me to challenge maybe a little bit your introduction. First of all, I'm very glad to introduce to you Fiona van Echelpearl. She is Deputy Director General, Directorate General Market Infrastructure and Payments of the European Central Bank. Fiona, we have seen that this new paper, the DORA, the Digital Operation Resilience Act, as a part of the digital financial package. Do you think that this is the right document to tackle the digital transformation risk mitigation through perspectives and consistent rules of resilience? Does DORA create only a unified approach for Europe, or does it really bring Europe back to the forefront of the most modern operational resilience strategies? Are we then ahead of Europe, of US and Asia?
Okay, good afternoon. Thank you very much, Dr. Watt, for the nice introduction, and also Dr. Lair for the scene setting, which I think gives a very nice picture of what lies ahead and how prepared we need to be. On the specific question of DORA, the Digital Operational Resilience Act, this legislative proposal from the European Commission, I think this is really a very far-reaching piece of legislation. As you've said, it's really something that aims to unify the financial sector, whether we talk about banks, whether we talk about market infrastructures, which are, of course, the area of particular interest in my case, or third-party providers, which are increasingly important, and we see more and more reliance on these. So I think from my perspective, I would agree that DORA, once it is up and running, once it's implemented, and when we have all the structures in place that are foreseen under DORA, this will really bring Europe to the forefront, and we would be ahead of other major jurisdictions like the US and Asia. And maybe just picking out a couple of the elements of DORA that resonate a lot with us as central bankers. One is the threat-led penetration testing aspect in there. This is something we have worked on ourselves. Also, as my colleague from SWIFT well knows, we have worked on this in cooperation with the Euro Cyber Resilience Board and, let's say, the national central banks of the Euro area. We have developed this framework, and this is going to be taken into account in DORA. So it's really a very important piece to have this type of testing as mandatory. I think there's nothing more enlightening for any of us if we take external experts into our own four walls and let them loose in our systems, let them see what they can find in terms of cyber hygiene or cyber posture, and what we can learn from that. And I think it's important that with DORA, you have this not just for the individual entities, but you're looking at this at a sectoral level. Because at the end of the day, we are all as weak as the weakest link. We are very interconnected, and we are becoming more interconnected over time. So I think a piece of legislation like DORA that brings together these different elements and that takes into account what exists. We also have the NIS directive there. We have other reporting arrangements that exist under legislation and the payment side, the PSD2, for example, also the area of banking regulation. It harmonizes a lot that we have already and puts it on a good platform, I would say. Thank you.
May I come up to this question of the weakest link a little bit later. But first, let me introduce Leo Punt, the CIO from SWIFT in Brussels. Thank you, Leo, for joining us. How can an international organization like SWIFT ensure or even enforce international common security standards requirements?
Well, yeah, sorry, go ahead.
Yeah. It's yours.
Okay, thank you. Thank you for having me here and the question, of course. Well, when it comes to to our customer security program, as we have been sort of rolling that out over the past years and evolving that as we go along. I mean, of course, to have this rolled out widely through SWIFT as a critical service provider, we need to make sure that it's at least a mandatory program with the security controls and requirements that have been set. So clearly, we wanted to make sure to get that high on the agenda. That's what we realized we had to do. At the same time, we wanted to make sure that setting that standard ourselves had the necessary practical implementation capabilities to make it feasible as a basic hygiene for all institutions connected to SWIFT. So there's where we made sure to set that basis with the basic hygiene, which everyone should adhere to with mandatory controls, and then have advisory controls that are more best practice oriented, that are highly recommended, but not necessarily mandated as such. Yeah, making sure that that we can have that support also from supervisors to help in making sure that that's mandatory. It was important to make sure that this could be rolled out. If we talk about main challenges and lessons that we do see, of course, the main challenge, as far as I see that, is to keep pace with attackers. That remains sort of the main challenge. How do we make sure that such a program keeps up with an evolving threat landscape? So that means that every year we needed to update, and we continue to update our control framework to make sure that it increases that basic hygiene level and takes into account latest threats that are developing, and we see that evolving over the years. So that will continue to be done. Annual updates. I think an important lesson that we have as well is there where we set the standard to implement that from our security control framework from the beginning. More and more we are also engaging into working groups, also input from our customers, and of course other participants in our ecosystem, to make sure that it's not only our standard that we are rolling out to customers connecting to SWIFT, but that it's also being seen as more an industry standard that is jointly updated and maintained through working groups and feedback. So that's I think an important evolution that we have been managed to achieve, and as we are progressing, I mean, our track record with our control framework is strong, and we managed to keep that strong. And of course, we continue to evolve that going forward. Main thing is, I think, with the evolving threats, that we need to keep updating that to keep pace of the threat landscape and the hygiene measures against that.
It's very interesting. May I ask you once again a little bit more precisely? We talk about industry standards and we talk about mandatory requirements.
Yeah.
First, two questions. Do you think what is more feasible, an industry standard or a requirement from a regulator?
Well, I think you cannot do one individually. I mean, in order to make sure that you have a level of mandate to ensure that things are implemented and that it gets the level of priority that it needs, you need to make sure that you have that regulatory support as well to do that. Because as we as SWIFT, we cannot be, we should not be a policeman and cannot enforce that to our organization. What we have been doing and that we continue to do is make sure that we set a basic hygiene level, that we give a level of transparency in terms of attestation and sort of attestation and independent assessments against that. But in order to make sure that it gets and maintains the right level of priority, regulatory support is also important.
Jürgen, can I jump in here on this
Please,
one? Because
please.
a lot of what Leo is saying and what you have asked, it really resonates with me, because I find the SWIFT customer security program and others like it, that other critical service providers in the network area are offering. It's very important that we work together. Entities like SWIFT, they know what the threats are, they know what the risks are, but it's important that the participants that use SWIFT and that participate also to the infrastructures that we as central bank overseers are seeing, that they actually comply with these standards. So we really have to work together. The push has to come from both sides, from industry actors and from central banks and other authorities that are regulators. I think in the area of cyber, it's really a dialogue. It's a common mission. It's not going to be achieved by one side working on its own.
Carsten, may I bring you in this discussion? There are actually a little bit more than two sides are pushing. There's also a third side, very important, the acceptance from the market. And as you mentioned it already in your introductory, you say that there is a responsibility for a certain risk culture. And as I know, you worked in rather different business environments, not only from the culture in different countries, in different areas of this world, but also in different roles and different positions. Can you give us a little bit of experience what really makes this risk culture work, though that we have not a kind of an attitude, we are waiting for a new regulation and we invest a lot of money to just sneak around?
Well, thank you. First of all, I would like just to follow up on what Fiona said. I mean, I don't see us as a, let's say, third party in this discussion. So we are part of, let's say, the industry in the way of being an outsourcing company, a part of that way. But I totally agree with Fiona and Leo that, and that happens already over the last, let's say, 10 years at the minimum and the latest, to work closely together. Because I think we have to say goodbye in a way of, as I said in my keynote, to predict the future. We do not know what's going to happen. We can do our very best. And I think that's only possible if you bring together all the different point of view standpoints into the discussion. And that's the same like on the risk culture. I mean, there are two, I would call it buzzwords, but to be honest, they are very important for this kind, for the answer to your questions, Jürgen. It's called to walk the talk and tone from the top. If that is not, let's say, set up, if that is not working, so if there is no risk culture or risk awareness being defined by the top management, whoever top management now is, because if you're looking into a ministry, which I think you mentioned where I worked closely to, then it's maybe the minister or state secretary. If you're working in the bank, then you have the board members, etc. They must, let's say, they are in charge anyway, accountable for that, but they must set up the risk culture, the risk awareness, and as I said, walk the talk. They must live with that. So not always pushing through some decisions, credit decisions, trading decisions, if this is not fitting into the defined parameters. Culture often has this link towards, let's say, different education, etc. From my experience, that's maybe part of the way how to deal with, let's say, a decision process. So, for example, I lived in Tokyo, in Japan, and I knew that it was difficult to get my Japanese colleagues involved in the discussions. They were quiet. Usually they were waiting a decision, but finally, short before I took the decision, then they usually raised the fingers and came up with very, very important things. So once you know that one, you have to steer this kind in meetings, etc., for setting up this kind of or coming up to a decision. It's the same if you're working closely with people from the public services. They have, let's say, a very clear focus. Usually they don't want any risk. So I said, then we can stop a meeting, because if you don't want to take a risk, you don't have a chance to get a yield finally. But it's always like a way of communication, of dealing with the issues. Finally, you have to do the same in every organization, at least I worked in, and regardless whether you worked for myself in Japan, in Dublin, in Luxembourg, wherever, you have to set up this risk parameters, define your risk culture, what is acceptable, what is not. you must trigger these issues, and then finally you must have, which I think is one of the most important but also most difficult tops in setting up a risk culture. You must be quite very rigorous in application, in applying these parameters. So you cannot say, well, I know this guy has made a lot of profit for the last 20 years and now that's okay. No, you have to be quite very rigorous, which means not brutal, rigorous. Just stay to the parameters you defined. And what I described in my keynote, before that, you have on a C level, and then of course down to into the organization, to set up this kind of what could happen, what if, yeah? And therefore it is quite a very intensive process on setting up this, what then finally is going to report it, for example, to the regulators, etc. But the board members, the board level has to really get into not every details. You should not be, as a board member, a better technician than you're doing your job wrong. But you have to find the right and maybe the best technician to do your job, because finally every company has a different risk profile, a different risk appetite, yeah, and therefore it is not easy to give, let's say, good advice in the way of there's one solution, yeah. But what I mentioned, the board members must be the driving force on this one, and once turned from the top, then it's going through the organization.
You give us this catchword, from the top. So let's go to the real top of Europe. On December 16th, Fabio Panetta said in his speech, "Keeping cyber risk at bay," I'm quoting, "One thing is clear, the operational resilience, and with it, the cyber resilience of financial entities and of our financial system as a whole is just as important as their financial resilience." Fiona, does this mean, if I take Fabio Panetta serious, do we have to expect regulations or ECB's expectations on the same level for operational resilience as we have already on financial resilience?
Okay. No, thank you very much for the question. I think this is a very interesting point. And of course, we're all aware after the financial crisis that we have seen some years ago, that there has been a huge investment and a lot done on the regulatory side to enhance financial resilience, not just of banks, but also of market infrastructures as well. And I think of also central counterparties as well. A lot has been done there to also have tools like stress testing, for example. We have a lot of sophisticated stress testing in the area of financial resilience. We're not really that advanced when it comes to operational resilience. These are things we have to look at. We do have guidance out there. Whether we need more, well, with DORA, we will have more in the form of regulation, and this will not all of it is new when it comes to DORA. It's picking up on pieces that are out there, maybe not in as structured or as harmonized or a way as one would like to have it, but this will come with DORA. So I do think that we will see a higher level of operational resilience. It will be supported by regulation in some areas. What is different, let's say, I think when it comes to operational resilience is, and I think this goes back also to what Dr. Lehr was saying at the start, it's not a static thing. It's not a moment in time. When I think of the cyber resilience oversight expectations that we have set ourselves for infrastructures, for systemically important payment systems, we're not assessing them in terms of their compliance. We're looking at different levels. We're looking at whether they are evolving, advancing, or innovating. And we take a proportionate response here. The more systemic the entity, the higher the level they should be achieving. They shouldn't just be evolving, they should be advancing, and they should have their eye on the innovating level, because the cyber threat landscape is changing. So to come back to your question, I do think we will see changes. We will see regulation like DORA. We will see oversight expectations, supervisory expectations being set, but they need to be fluid. They need to take into account the more dynamic nature of operational resilience.
Leo, may I step a little bit in this with two catchwords again? On the one side, we heard about defining risk appetite. So how much of flexibility you allow your members to have a different appetite. And the second one is the question on being not static, be more dynamic. What defines, according to your opinion, a possible disruptions? And are we talking exclusively about disruptions which have already occurred in the past, or do we have to be even more flexible?
Sorry, was that a question?
Can we really limit ourselves to occasions, to which disruptions which occurred in the past, or do we have to develop new methodologies to be more flexible, to think ahead what could happen?
Well, if I would react to that, is that of course we need to prepare ourselves for what could happen. But when I take sort of in my day-to-day role, when it comes to operational resilience, we have to make sure that we keep also a strong focus on the basic elements that help to make sure that we stay resilient. So that is a bit, in the analogy gray rhino and black swan, I think we need to look at the basics first. Where there are significant risks, if I take the cyber example, patching of systems is still something that needs to be high on the agenda of many institutions, because it is an exposure of risk. So yes, we need to prepare for the what could happen, and of course we look at that from different angles. From a risk perspective, we have our day-to-day risks, we have our more emerging risks that are evolving, and we also have our more extreme but plausible risks where we need to prepare for. But it needs to be in balance with sort of the basic elements that we need to pay attention to as well. That and not only look at the extreme scenarios.
Carsten, as you worked in different areas of the business, maybe it's a little bit unfair, but sometimes I have the impression when I talk to people, when we talk about operational resilience, we're talking with specialists. And either I have a specialist which comes from the IT technology, or I have a specialist coming from the area of regulation, or I have a specialist who knows the financial impact. Carsten, do you have any idea how to get a more holistic approach on that one, and that those specialists really can talk to each other?
Honest answer, no. If yes, I would make myself self-employed and would offer it to all the companies let's go talking about. What you mentioned, Jürgen, we have specialists in every function in the company. You have the accountant, the tax accountant, the salesman, you have the development technician, the ops, the DevOps, whatever. I think what always is good or helps to set up this kind of business continuity management. And I would like to stress that I don't want to see it only in the tails, like only discussing about disasters in the way Leo just mentioned. To see we also have to tackle the normal business, but you should not forget the tails, because that could happen. Yeah, take for example 9/11. There was a very low probability, nearly nobody expected, but it happened. Yeah, and some of the banks, as far as I know it from this point of time, they were already they had this, or they had defined this scenario. Others not. So you can ask, how can we come to a way that everybody sees this might be, maybe now, yes, but at this point of time, this is a scenario. So I think if people see a lot in a company, so not always staying one time in accounting department, forever in accounting department, you see a lot of other functions in a company, and if possible then in other regions, you will get another feeling, another approach towards this kind of operational resilience. You mentioned, or I don't know, I lived in Tokyo. and it's well known for its earthquakes. And the first time I made the experience of an earthquake, it was like that a lorry is driving beside you, but it was down on the earth, and you didn't expect what's going to happen now. And this, you get accustomed on the way, so you learn to live with it, you learn to work with it, and that means you already have to take your precautions for that kind of possible risk. So when I came back from Japan here and tried to establish this kind of business continuity management at the bank, I worked in 2000, 1999, 2000. They didn't laugh at me, but they said, okay, he's coming from abroad, so that give him a bit time until he's accustomed again to Germany. Yeah? I think if possible, you have to see a lot of other jobs, departments in your companies, and especially to be responsible for it or accountable. So you have to be in a P&L charge, for example, because that makes you, experience. This drives you to a decision, which of course can be wrong, but you will learn from that one. Yeah, so it's not easy to mention that one, because all what Fiona and Leo mentioned, I would sum it up to the PPT problem: personnel, processes, and technologies. And there's totally different in companies, in departments, but as far as possible through job enlargement, job revolvement, you would be able to educate people thinking in these areas, which all of us hope will never happen. So like, again, 9/11, whatever, but at least to make it, let's say, aware that these kind must somehow be in a way of a screen and be somehow controlled.
Fiona, there is a German saying, something like, paper has patience. So you can write almost everything in an act, but it has to be feasible. So if we expect that the board level, the senior managers of a bank should be able to take responsibility for this operational resilience, do we have to ask them to have different skills, different training than in the past? So for example, we talk about credit risk. It's quite clear you need the theoretical, you need the practical experience, and also you need the character for it. How would it will be in the future with operational resilience? Do we have to expect that a board member has to have at least 3 years of IT experience?
This is indeed another good question to consider, but I do believe that we are seeing that. If I look at the entities that we are overseeing, the different market infrastructures that are out there, when we started to discuss operational resilience with them, now of course the operational resilience is more at the core of what infrastructures are about maybe than banks, but still when we first started to discuss it, the level of knowledge at board level was limited. But over the years, I am impressed at how up to date they are in terms of the threats that are out there. And even if they don't have, definitely not all board members will have the detailed technology background, and this isn't necessary, but you do need at least one person in the board with an interest and an awareness and a knowledge, and that they have the understanding. They don't have to have all the answers, but they need to know who they can go to get the answers to these. So I see it's becoming more topical at board level, and I think we see in many articles that have been written, cyber risk and operational risk are some of the topics that are most alarming to board members, because it's difficult to understand and know whether you have done enough. I think when it comes to credit risk and liquidity risk, where they have years of experience in this field, and you know a little bit more what you're dealing with here, the sophistication of the threat actors, it's rising all the time. They're even cooperating, working together. We see more and more ransomware attacks. We see that they are bringing down parts of the industries in different countries. And so the threat level is very high, and I think there is a growing importance, and we see that there is an increasing awareness at board level, and this is very much needed.
Maybe if I may,
of course, go ahead,
comment on that, because of course I fully agree, and what I think is key to that as well is that when there are threats or vulnerabilities that are exposed, and that we use that as an opportunity to learn from that. And I think a good example was the SolarWinds compromise, third-party supplier attack that at least we used in Swift, even though we don't use the products, we used it as an opportunity to revisit our controls and make sure that we also share at board level what the exposure of that can be, and to learn from every serious event that occurred and what we can do with it.
I really would like to focus a little bit more on this composition of different knowledges and experience necessary to be really ahead of operational resilience. So maybe, Lei, let's talk a little bit about the SWIFT customer security control framework and the mandatory advisory security controls for SWIFT users. Could you please share with us some of your first experience, for example, with setting up the cross-functional teams to oversee implementation, including IT, risk, and compliance? That might give us an experience how much of different knowledge is necessary.
Well, thank you for the question. First of all, when we designed the control framework as we rolled it out, we established this dedicated team of experts from the different areas: cyber, IT, compliance, internal audit, and also risk. And we made sure to, or at least try to anchor those controls around a number of principles that we defined for that. And, first of all, raising the bar, but it needs to be manageable from the users, the SWIFT users as well, so slowly and pragmatically, making sure that we're agnostic in terms of setting the controls for all customers, so that it's for everyone applicable in terms of the mandatory controls. Also make it adaptable so that they can meet control objective rather than just telling exactly how to implement things. And make sure that we also put deadlines against when attestation needs to be completed. So now, for this year, we are strengthening our framework with an independent assessment framework, which basically has the purpose to drive the veracity of attestations that has been applied over the past years already, making sure that we enforce that by an independent assurance and an attestation that needs to be signed off by either a third party or a second line or a third line of defense, or by an external assessor. So basically, from the outset, we have been trying to use the combination of the different skill sets and functions to make sure that we allow that comprehensive framework, and that's also what we apply to the independent assessment framework that is being rolled out.
We look a little bit in literature. We would say operational risk management supports both operational resilience and financial resilience. So, and today we discuss the business continuity and the operational resilience under the specific conditions of the payments industry and the infrastructure necessary for modern next generation payments. As we know, this DORA is part of the digital financial package, Fiona. So therefore, I would say it would be insufficient to regulate status quo only. So we need a certain degree of imagination about innovations that will promote Europe's next prosperity. So do you really believe that we have in DORA already put in enough imagination, enough ideas that we are ready for these next challenges? And we have discussed a few of them today, and we will go on more discussion in the next sessions.
No, indeed, yeah, you're absolutely right. And I think future-proofing regulation is something that we have to be more and more aware of going forward. My own personal view is that, yes, I do believe with DORA, this is foreseen. As long as the financial entities that we talk about are providing the type of services that fall under the personal scope of DORA, or are critical ICT third-party providers providing services to financial entities under DORA, then the requirements of DORA will apply. And of course, maybe it's not going to be so clear in the level 1 legislative text, but when you move to the regulatory technical standards, this is going to be the place, the secondary legislation, where these type of distinctions can be made and where one can apply, let's say, a more proportionate approach depending on the type of entity that you are looking at. Their significance. It's not going to be immediately the case that new entrants are going to be immediately of systemic relevance in the financial sector, but this, of course, they will ramp up their business over time, and we need a proportionate response here in DORA so that we target the entities according to their systemicity or their criticalness for the overall sector. And this is also something, it's not just in DORA, it's something that we are trying to do ourselves in the payment space. We're coming with a new oversight framework too for payment instruments, schemes and arrangements. We call it PISA. We had a public consultation on this last year. We're also trying to cast the net wide, if you wish, so that we have the possibility to capture many entities, but it's not the intention to have the same level of oversight or supervisory scrutiny on each entity. We have to distinguish according to their relevance and their significance in the market, their significance at overall European level or in a particular country. So there are a lot of aspects to be taken into account, but I do believe that DORA is on the right track there.
Leo. Sorry, please go ahead, Carsten.
No. Okay, I would like to just to add one thought when you, Jürgen, mentioned that OpRisk should support the both operational resilience and financial resilience. Just from my experience, I would like to recommend to see it still as part of an integrated ecosystem, because once you have a problem on the operational resilience side, this will cause or usually lead to financial resilience. Not only maybe a resilience problem, but really to a loss. Because I see a little bit the tendency that a dividing in between operational, like non-financial risk, financial risk, operational resilience, financial resilience. It is, let's say, it is an integrated ecosystem. So you have to take, and that's what I mean that's what I meant when I spoke that business continuity management, in my definition, is part of a general management function. You have to keep that in mind. Yeah, you have your specialists for sure, and I agree with Fiona. You have to have that written down in frameworks, in guidelines, whatever. But the higher you go in the hierarchy, the more you must combining all this into a, let's say, general reflection on, let's say, general enterprise resilience. So in order to avoid that it's going to be diverging. So one thought from a practitioner.
I would like to get a little bit deeper answer, maybe from Leo, in exactly when we talk about these new security requirements. Banks have to invest to ensure their ability to provide important business services, even under possible disruptions within their specific impact tolerance. So first of all, if I read sentences like this, I see huge amount of euros going down to the chimney. This is a lot of money. So my question for you, are we flexible with respect of defining a possible disruption, which would reduce immediately our investment requirements, or do we have to be strict? And if we are strict, does this cause a kind of a concentration process in Europe that only the big ones can really survive and afford to be compliant?
Well, if I talk from our perspective, of course, I mean, I think we need to look at sort of the plausibility from the perspective of, I mean, real threats that can happen, and then we need to make sure to enforce that as well. So I think, yeah, I mean, expecting everyone to adhere to severe or risks that may be expecting too much to be implemented will not help sufficiently, and that's sort of how we defined also our framework. It needs to be realistic for people to implement that within the timescales that we have. So I think in that point of plausibility, yeah, we need to be careful in defining that. I mean, we define for ourselves sort of the extreme and plausible risks that we track and that we follow up on. But in terms of for the whole of the industry, we need to also be careful on what to expect from everyone as a basic level to be compliant to.
Okay, I give up at this point. I can't warm out anything of insight. Something new is coming on in this direction. So let's ask a little bit more pragmatic question to Carsten. Carsten, you in your current position in the board level of a company who exercises fire drills for more than 15 years. And within these fire drills, you sometimes did even very strong measures. You pulled out the plug and you moved entire departments several hundred kilometers away to running in a different site. Carsten, do you think something your company has done already 15 years before, that this will be kind of a standard in the near future, that this kind of fire drills, as you mentioned in Japan, will be really necessary?
Answer is yes, it must, because you can write down as much papers as you want. You can theoretically think through. You have to do that in practice. Yeah, that's why military is using these maneuvers, to use it to test, to train, and in especially this environment, you have to do that. And you can then distinguish between, let's say, an announced fire drill, and that's what my favorite is, an unannounced fire drill. Because coming out from my experience in Japan, the earthquake was not announced. I'm coming in 2 days. It came suddenly, and then you have to react. So you have to train in different environments. So you have to set up the scene, to define your risk scenarios, and then you have to train them. That's the only way to do it, because otherwise it will only be, as you said, paper is patient. Yeah, and therefore it should become the standard. And let me finish with the saying in Japan 20 years ago. So I stayed there in 97 to 99, so more than 20 years ago. You had to prove to the regulators that you have trained it at least, I think, twice a year, which I today think it's too less. You must train it more. Let's say at least a quarter. It is again a cost burden, because that will require a high organization. But I think in order to be operational resilient, you should be able, as a bank, but also as a client, then to rely on the operational resilience of your outsourcing company. Yeah.
Maybe one thing to add there, Dr. Bott. I mean, we every year do what we call a cold start test as Swift, where basically, we build up a new infrastructure from scratch and do that with our clients. Every year, we have, of course, been considering, should we do that with customers as well during the pandemic situation that we had. We did do that. I mean, not only because of that, but every year we find new things that we can improve together. Customers can verify that they can connect to that cold start infrastructure. So I think it proves how crucial it is to make sure that you test such scenarios and make sure that when you actually need it, it actually does work in the way that it's intended to.
If I could maybe also add to this point, I think we should also include the regulators and the authorities in these types of tests too. We have done some ourselves in the past. We had a TTIS exercise and a UNITEST exercise some years ago, but with COVID, we have slowed down a little bit our response. Now, of course, with DORA simulation exercises will come, but I think authorities also need to be on the ball. They need to be able to react. They also have a role when it comes to crisis coordination and communication. So I think the onus is also on us as well in this area too.
Yeah.
You gave me the catchword regulation. So the regulation really requires banks to have adequate technical contingency and business contingency plans in place, even in case of severe business disruption, banks must be able to operate on an ongoing basis. That is just quoted out of some of these regulatory texts. So Leo, is this utopia or realistic request?
I do think it is a realistic request. Of course, as I already mentioned, we are actively participating with that. We're doing site failovers very frequently, DRI or cold start exercises. But I want to re-emphasize the point that testing is key. I mean, making sure that you define those plans and really test them on a frequent, regular basis is.
Fiona, according to Fabio Panetta, I quote, "Trust, collaboration, and joint initiatives form the bedrock of the CRB, Cyber Information Intelligence Sharing Initiative." I learned from my first employee, it's always the customer of your customer who pays the bill. So please view me now as your final customer, the users. What kind of communication do we have to expect from the regulators in case of a big event? Will it be just an appeasing?
This is an important question, and it's something that keeps our minds very focused on the side of authorities, and especially central banks, because usually central banks are the lender of last resort and the entity that one comes to in case of a crisis situation. I think when Fabio made these remarks, of course, he had in mind what we call the SISI initiative, the initiative where we have cyber intelligence, threat and information sharing amongst the industry representatives in the ECRB, the Cyber Resilience Bank. And we have fostered this initiative as for industry by industry. As overseers and supervisors, we are not directly involved in this platform. We put it out there so that the different infrastructures who are part of the ECRB and their critical service providers as well, that they will share information with each other. Now, of course, in a real crisis situation, the authorities, the supervisors and the overseers will also have to be involved as well. And there are exercises and activities even at G7 level where we do test this and we involve all parties, because I think communication is very key, and we need to have we need to share the right messages. We can actually do more harm by saying something wrong than by not saying anything at all. So we really have to look into this aspect, because our messages will, of course, reach the final consumer, not just the infrastructures or the banks, but as you mentioned, the man on the street or the woman on the street, and they want to have the reassurance that something is being done and that there are authorities and other entities out there that know how to deal with the crisis. So we will have to focus on communication also and coordination going forward as well.
Fiona said, and it is one of her first statements, the weakest link makes the strengths of the chain. I changed it a little bit in different words. Carsten, do you think that, as we know, information is very important? Do you see any room for improvement when talking about the ECRB's cyber information sharing initiative? Could there be anything better to make sure that the private industry has also the most important knowledge immediately available?
Well, I would recommend, in taking up what Fiona said, that you have to come together as often as possible. You have to share the information through trainings, through communication channels, what I would call it set up in operations rooms, what you know, especially from military operations, in order to have all the different informations, let's say, together, and then of course define the communication channels in order to avoid panic in the, let's say, normal population. Yeah.
Okay, thank you very much.
Testing, as Leo said.
Yeah, time is always too fast, and I have been told I should hand over not exactly at 4, a little bit earlier. Though I really would like now to hand over to Professor Sander, my colleague from the Frankfurt School of Finance, and he will probably continue with a very, very interesting session on the digital euro, especially with respect of this next settlement changes. So thank you very much to my team, and thank you to the audience.
Thank you.
Thank you all.
Thank you.